Hey everybody, welcome to Trendy Trading. Today is the 17th and futures do kick off today Central Time at 5 o'clock or 1700. We'll be talking about a little bit of ES futures. We'll be looking at the NASDAQ. We'll be looking at the SPYs and the Qs, looking at the dollar, looking at the skew, looking at fear and greed, and giving you my overall sentiment. Before we get started, my overall sentiment is this. We've pulled back. We've created some range into earnings, and I love that. As a day trader, swing trader, we want to see range being created. It gives us more of a move for that cycle that we're getting ready for. Because we have earnings, I do believe that a lot of price action has come into support, and we again could be seeing maybe a small pullback tonight in the futures with a potential of a red to green morning. And if we get that, then I'll be looking for that cycle 1 to 3 days to the upside. So we'll talk about that, and obviously I'll be here every morning to kind of coach you. Another big factor this week for me, we've talked about it all through the last week, was me being able to get rid of some of that baggage that I was holding on to for some of my long-term option swing trades that did not work out. So I'm coming in nice and fresh. I have some leaps on. I have 2 positions on. That's a big deal. That really helps me to free up my mind. I feel rejuvenated. And I am ready to trade. So let's just start here. Again, we'll talk about sentiment, look at what's coming up, and this should help you definitely get ready for this week, as it always does. All right, so the SPY, you can see that price here. This is a weekly chart. I'm going to go over this with you, looking at edges, looking at supply and demand, looking at the EMA cloud, understanding buy and sell signals, and so forth. So far on the SPY, and high in sight, what you'll see here is that we had these edges that have been here for quite some time now. These blue edges have been here for over 4 months. So therefore, this is not an indicator that you would specifically say it's lagging. It's already there, and we have a process built around it. When price comes down into this edge, we're looking to go long. If price closes underneath the bottom of this edge, we're looking to go short and or not really pump the gas until we can reclaim that area, okay? Now, let's look at what we have. So we have the top edge, okay? That's going to be our supply. For anybody that's kind of new at trading, you could call it resistance for now if you don't quite understand, but right here, that's that blue edge. And then we have the mid. We're looking at for support for right now. And down here would be demand. All right, this is where buyers should show up in the event that we had some sort of big pullback. Notice that once price went underneath the edge here, you don't want to get long unless we can close over that edge on a weekly. Notice that the weekly cloud has always been support for the most part, especially in 2021 and really for years and years before that. But things started to change in 2022. We started to close in here. We actually broke below this, and that was a big difference that we saw for a long time. If you go back, matter of fact, the last time that actually happened was back here during COVID in 2020. So this entire time we just kind of melted up, and now things are just really getting choppy. We're underneath. So a big significant move here the last week was the fact that we started to close underneath the edge. Now, again, not only did we close underneath this pink edge under here, we also closed underneath the cloud. Anytime we close under the cloud, we want to be really cautious, especially on our long side. Now, because earnings is coming up, this could have been a nice flush, and then we're going to see a cycle up. But again, tomorrow, what we'll be looking for is whether or not on a smaller time frame, we can actually move over this trendy edge. Remember, this is a higher time frame, demand and supply. The peak levels are more of a mid time frame. So again, on the mid time frame, we need to see a reclaim of that lower edge in here. And let me go ahead and zoom in just so you can see it a little bit better. There's a pink line right there. Ignore these lines over here. Okay, nothing to be concerned about at the moment. But right now we are concentrating on this edge here. All right. Long as we stay under, be cautious on the long side. So tomorrow, again, my sentiment says maybe a pullback because a lot of people are anticipating that. So fear or sort of that adrenaline rush, you got to think about the traders. They may come in, they may be a little spooked, but I think bigger money, bigger pockets will be looking to scoop up and possibly looking for a 1 to 3 day rally to the upside into some of those big names. All right. So again, that level, let's go ahead and talk about it, is roughly 438.60. We need to reclaim that 438.60 for an intraday trade to the upside. But once again, I'll be coaching you on that. Notice that you could, every time we came down into the mid edge, it's found support here. This is a big level. And if I'm completely wrong and say the market wants to create some more divergence or some more range, then I would be looking for price to move down into what I call the 618 of the rally. So just so that you understand, all I did was take some Fibonacci's here. And when I say rally, I'm using this rally here that started 14 March. 21 March, and then this pivot high of 28 March. I'm going to simply measure from the lows into the highs, and you'll notice that this level here is the 618. Why is that important? Because the 618 or the Fibonacci level, that lets me know that that trend that I just measured is broken. Therefore, bulls, you kind of lose your opportunity if you can't hold this level. If that breaks, then again, this trendy edge down here is my go-to for demand. As of right now, I would expect buyers to show up there. So basically on, max pain, if you will, would be my lower yearly mid edge. And if we, hold the 618 and reclaim this ME, which was 438.60, I think things look good. Again, overall sentiment, maybe a slight pullback into the 618 area. We find buyers and then reclaim the edges. We kind of start the cycle to the upside. All right. If this, then that. Just hold on to that. Try not to hold on to a thesis or you could get burned. Also, looking at this again, I just want to reiterate, we are underneath this cloud. As long as we stay underneath this cloud, it is going to be resistance until it's not. So as long as we stay under there, as long as we stay under the edge, please be cautious on your longs. You want to be thinking, I don't really want to do anything unless we reclaim, or I really don't want to do anything long side unless we come into a level. Wait for the levels. All right, let's go ahead and move on. And I'm going to take you off this look here, and I want to go into a smaller time frame. So this is your daily. Same thing, guys. Underneath the cloud here, that is resistance until proven otherwise. There's a lesson in here, I promise you, and that is we demonstrated this I think it was last Thursday. I took a trade. We made 200%. On a short on RBLX, but it's the same thing across the board. You don't want to be taking puts if we gap down. Okay, that's me. We don't want to be taking puts if we gap down. A matter of fact, I want to be taking puts if we come back into the cloud itself. This is the better risk to reward. You don't want to be buying puts when we've already dropped and premium is high. They kind of suck you in, and all they need to do is bounce this thing a few bucks, and then all of a sudden your position is toast. So again, wait for levels to do anything. So in this scenario, if we were to gap down into the 618, I'll be looking for support in that area and actually be looking to go long from that red to green that I was talking about. For some reason, if we open up into the cloud on a smaller time frame, this is the 4 hour, I'm going to be cautious. All right, so use this cloud to your advantage. Matter of fact, if you notice, even on a 4 hour, once we start to build value over that cloud, that's where you actually want to be thinking about going long. And anytime you're underneath the cloud, you want to be thinking, hey, wait a minute. Do I really want to go long as we're approaching the cloud? Because in most circumstances on the cycle down, this is an area to go short. Let's go ahead and move on to the Qs really quick. All right, so this is the QQQ. We're going to go to the weekly here, just like that. And I did write some notes for you guys. You can see here it says approaching the inside and up again, and the focus should be whether or not a new PL pivot low is made. Typically into earnings season, we will not make that new pivot low, typically. No, price turned before the touch of the lower yearly edge. Price is oversold on a shorter time frame. We'll look at that here in a minute. And there is some divergence. Range is being made into earnings season. Basically the same story. Bulls need 344.60, bears need less than 335. So let's go over this really quick here. All right, so the weekly, we have a little bit more divergence. And when I say divergence, I mean where current price closed and where the cloud is. Remember, I have hollow and filled candles. Your filled candles, price is closing at the bottom of those. On your hollow candles, prices close at the top of those candles. Okay, so we close down here towards the bottom. All right, and notice where the cloud is. This is called divergence. All right, also notice this was the Control Z puts us back there. Notice that we've already come into the inside and up several weeks ago. It worked well for us. That was a nice cycle up. And here we are, as the notes said, will we make a new pivot low? And the pivot low that I'm talking about is right here. I do not believe we'll make a new pivot low unless some sort of big catalyst comes out. I just think that the market has created some range, may create just a little bit more, but we'll get ready for that divergence. Let me give you an example. I'd love to draw. So if we drop again, say right into this area, but we do not make a new low, we start to round out. What happens is you have this cloud, if you will, right here. And then you have this support, which is about right here. And now you have all of this room or this range to work with for a nice run to the upside. All right. So again, big factor here for anybody looking at tech and so forth, I would be looking at the lows. Again, I don't think they'll be washed out here. If for some reason they do, then obviously I am concentrated on the lower yearly edge for a reclaim, and that's where I would definitely be starting calls out anywhere from 45 to 90 days. To the upside, all right, let's just look at this once more like the SPY. We broke below the edge. No reason to get long. We get into the cloud. Very choppy conditions. We break below that. You don't want to be long. You want to be looking for edges and so forth. We flush the edge. We can't reclaim the edge, but we come into the inside and up. We reclaim here. But again, the cloud is resistance until proven otherwise. Okay. Let's move on. Let's go down into a smaller time frame. Here's your daily. All right. Looks pretty ugly. All right, looks pretty ugly, but we are creating divergence. The wider it gets between the cloud and current price, the better, right? It gives us more range. Now, what can we see down here? If we look down and to the left, you could see that we have an edge here. All right, these are, again, not your yearly edges, but a smaller time frame. We have the pink. So again, supplier resistance, support until it's not, and demand right here. So again, we stay under this level here and we cannot reclaim, then max pain, in my opinion, can be right into this level down here towards 323.59. And again, do we take out that pivot low? All right. My guess is no. We'll come into some demand, wait for numbers, have a couple days of cycle up, and then we'll figure out, what forecasts look like and so forth through this earnings season. And if the case is bad, then we'll obviously look for targets to the downside. Again, overall sentiment, same as the SPY. I think we're creating range. We may get another day down, but I will be looking for bids to come in a red to green type of week. So that is my sentiment on SPY and Qs. Let's go ahead and break it down, though, into a 4-hour. Same thing. Notice that price is underneath the cloud. Notice that every time we come into the cloud, it's a better risk to reward for the short side. Notice there's a little bit of divergence here between current price and the cloud. All right. If for some reason we gap up into the cloud, take caution. All right. Unless we can start to break over some of the supply in here, which really is around 344 and some change. Now, that doesn't mean we're not going to try a trade to the upside. You all know that. We have many different indicators that we can use to get on the right side of the trade during the intraday. All right. So this is what we're looking at right now, though. This is resistance until proven otherwise. If we were to gap down, again, I'm not looking at buying puts. If anything, I'll be looking for support at or around this 334 level. All right. All right. So what does that mean when it comes to, our TOS or Thinkorswim? Well, This strategy here, we were looking at TradingView. This is called our neutral strategy, and we've been doing this for so many years. It really helps traders without overthinking things. It's pretty straightforward. If we break above the green, we're looking to go long. All right. If we break below the red, you can look to go short into these targets. Targets to the upside are resistance until proven otherwise. If I were long, this is where I'd be trimming and pulling those stops up. And if we break down below the red, I'll be going short. And again, covering those shorts as we hit into these levels. Notice that any level to the downside is support. That includes the red line. Any level to the upside is resistance. So again, if for some reason we gap up and we gap into this level, I'm taking caution. If for some reason we gap down into this level, I'm looking for support. It's that straightforward. All right. Take note of the numbers I have here, 439.19 to the upside and then 433.28 to the downside. There's a lot of room in here for things just to kind of bounce around and not do much. Remember, this area is developed by using supply and demand and Fibonacci's and keeps us from taking the wrong trade, as the higher probability suggests that we'll see a lot of chop in these neutral levels. Over here on the right hand side, I kind of broke it down a little bit more for you. You could see the future edges. So coming into this week, we're coming right into a little bit of support that could happen around the 437.72 area. So we'll see if that can hold. All right. But again, I'm not very bullish unless we can start to break above that 439.19 on the neutral strategy. All right. Let's go over here to the Qs. All right, so here's the Qs, same thing. If you would, please take note. Same indicators, same edges and so forth, just a different look. This is the neutral strategy. Basically, if we break below 338.12 on the Qs, look for levels to move or price to move into 335 and so forth. Again, this is support down here. So if we gap down, be careful. These levels should be support and probably give you a nice bounce. And remember, as we bounce up, you want to be looking on smaller time frames, say the 4-hour or even like a 30-minute if we're bouncing into that cloud. If we're bouncing into the cloud, that's where we want to look at our risk to reward. So for example, this is just hypothetical. Let's say the bottom of the cloud is right here. Let's say that price moves down into here. My risk to reward, my risk would be, hey, I'm going to take a stop here and I'm going to try to take this trade to the upside into the cloud, where then I would get out of the trade, because that's what's kind of been going on, is that cloud is resistance. Okay. So that's what we're looking at on the Qs. All right. Notice, please take note of the levels. 341.89, looking for longs, 338.12 down below. Looking for shorts, and please be careful, as I do expect a little bit of, at least on the first day back, possibly some chop and so forth. Okay. All right. So on the SPYs and Qs, let's go ahead and move out of that. We're going to come over here and take a look at the dollar. All right. So this is the dollar. It's flagging. Right? This is a 4-hour. It came into some supply, and I really was looking forward to the dollar not working out so well in this red box. And you can see, that did come true. Remember, when we get in a red box, I always tell you, as long as you're holding this bottom level, okay, be cautious, because the bulls are in charge. Notice as we keep creeping up here, we pull back. We did break down right here, and this is really what I wanted to see in order for the market maybe to start bidding or starting to start that cycle to the upside. But unfortunately, it came back with a vengeance, and now we're flagging. It's the same thing. All right, be careful in here. If you were to look at this like a stock, we're basically supported on this cloud for now. So until the dollar starts breaking down and closing down below this level, just be cautious on the long side for right now. All right, we'll be monitoring it. I could be wrong. Sometimes the synergy between the dollar and the market is not always there. So I'm always looking for clues to say, okay, well, I'm not going to pay attention so much to the dollar during my intraday trading. All right, so that's the dollar. Well, actually, let me show you a little bit higher time frame. This is how we got this level. All right, so you can see all the supply over here. All right, a lot of resistance in here, but we were building out support here. So that was kind of, on the backside, thinking, well, maybe, if this was a stock, I'm feeling really good about this thing to the upside. I just want to be cautious over here. So I feel the same way about the dollar. This thing looks bullish. It's holding these levels. There's a little bit of divergence playing out. The dollar doesn't really like to create too much divergence between the cloud and the weekly chart. So it's kind of getting there. Looks like it could slow down. And so therefore that market cycle to the upside could start for, like I said, 2 to 3 days. All right. That's the dollar. Let's go ahead and look at the treasury, which is going to be TNX. This was a level that I found couple weeks ago. Again, higher time frames. I believe this was on the monthly, but you're looking at the weekly. We have some supply up here. We have resistance. We have a lot of divergence between the cloud and here at price. So again, I think that this looks a lot like the dollar. We're coming into resistance. I think we kind of slow down, and that market gives you an opportunity for a couple days to the upside. All right. Again, that's the TNX. All right, so let's go ahead and take a look at the skew. Again, these are your hedge funds. We have these really easy levels that I like to just, base kind of what we're getting ready for. And I love the synergy because everything I'm telling you, you look at these and then you understand how it all comes together. It helps you get on the right side of the trade. So, up here, we're moving up towards risk off. The environment was saying, hey, be careful. Longs are not really working. And as this pulls back, all right, what you see in the background is as this pulls back, the SPY is basically pulling back. But it gets a little oversold and sentiment gets really bearish and everyone's jumping on puts. And really what's happening is people, smart money, is starting to look at this and go, wait a minute, all the things I just showed you are starting to show us that there's a potential move for a cycle up. We're not quite there. And that's what tells me that, again, you could have a little pullback and then potentially a red to green environment. The risk on area for me is at around this 130.5 to 120. But again, we'll be looking at everything. I'll be coaching and making sure that everything's lining up. And even if we take longs in this area, it's not going to be easy. So please understand that. But this is saying we're very close to getting a little bit more risk on just because so many people out there are worried and they're on the put side that why wouldn't you give us a nice cycle up to kind of take all of their money, right? So, all right. So that's what we're looking at on the skew. We're getting very close to risk on. And then after we look at all of these factors, and we think about sentiment, and we think about earnings, and we think about all the cool things that are coming up this week, you have to say to yourself, it feels like a pullback into demand or support, shaky a little bit, and then we're going to start getting some big names for earnings. Big names such as Netflix, Halliburton, Johnson & Johnson, IBM, okay? We have Tesla, Alcoa, Baker Hughes, Whirlpool, AT&T, Snap, Verizon. So many names out there where we could be looking at. They are going to give us the information we need if we continue 2 to 3 days up, or does it turn into a 6-day rally or something like that? Regardless, I'll be here to coach you guys. I can't wait. I'm going to be working on your ES future charts and NASDAQ future charts for tonight. Other than that, I'll also be looking at a few of our trade plans, and I've already went over COP in the room. And you can see that, again, this is more of an intraday trade until proven otherwise. I did the same type of thing on last week when we were talking about Verizon, and that one worked out very well. But this is basically what I'm looking at, entry on a reclaim, looking for the gap fill, and then possible moves up here towards 105 and 107. And if you go back to last week when we had Verizon, we had this plan. Look how well this worked, right? So we pushed up. That was our support, trim and take profits. Look at that. Absolute beauty. So things worked very, very well. You can see how well those levels work. So now that I've given you that, I want to talk a little bit about my approach going into this week. So, like I said, I've been super excited about having less positions on. The way that I want to approach this is, only taking X number of trades per day. I want to keep it really light for the next several weeks, and I expect you guys to kind of follow suit with me. Now, if things get better, and there is an opportunity for risk on, my idea is to only still take a couple trades, and I'm going to set these rules out for you guys. I won't sit here and talk about them too long, but basically, if my trades cannot keep a certain percentage, I want to get out of them. I want to keep a win percentage of X amount. I want to keep my leaps on and so forth. But intraday trading is where my focus is for this week. And I want you to be right there with me. So make sure you tune in 30 minutes before open. And then after that open, I'll probably be on the mic on and off for an hour to two before European close, which is 10:30 here Central Time in Florida, where I live. And then at 10:30, I'm looking at, I jump on the Peloton and I exercise. And then after that, I'll be doing like an update if it's needed. But please understand, we don't need to be in front of the screens all day, dissecting and micromanaging trades. I like to tell you, and I've been telling you this for a long time, that there's only two things that can happen. We're going to hit our targets and make some money, or we're going to get stopped out. So between those trades, between that target, between that stop, live your life. Even if that's inside the house for anybody that's day trading, do something. Find some exercise to do some meditation, read a book, do something that's positive that can help you stay in the game. Remember, it's all about allocation. Allocation for me this week, again, every one of my trades are going to be the same amount of money. I want to keep them at the same amount. And again, those rules are coming out to you soon. Please join us in the morning. If there's anything that you want me to cover that I'm not covering, that is your time to come in and say, hey, John, can you give me a quick blueprint on this chart? What is your opinion and so forth? I can't wait to work with you guys. Can't wait to trade with you. Have a great day. We'll see you soon and have a great Sunday.